Good day, ladies and gentlemen, and welcome to the Union Bank of Nigeria PLC FY 2020 Investor Conference. All participants will be in listen-only mode. There will be an opportunity to ask questions later during the conference. Participants on the webcast may submit their questions at the bottom of the page in the text box provided. If you should need assistance during the conference call, please signal an operator by pressing star and then 0. Please also note that this event is being recorded. I would now like to turn the conference over to Mr. Emeka Emuwa, the CEO of Union Bank of Nigeria. Please go ahead, sir.
Thank you very much, and welcome, ladies and gentlemen, to our analyst call to share with you our perspectives on 2020 and how we did and what 2020 is looking like. Thank you for joining us today. A pleasure to engage with you, notwithstanding the times that we're in. So if you look at Union Bank at a glance, we all have the text. For 2020, we ended up with total assets a little over 2 trillion, 2.1 to be precise, and equity 248 billion. Our customer base increased 10% over 2019. Employees are flat. Our ratings remain stable across all the rating agencies that we use. Our channels continue to serve us well. Union Mobile, Union Online, we have 5.8 million cards. Virtually almost all customers are carded. We have POSs, Union Direct, which is our agent network, which has been increasing substantially. Our ATMs, 900 ATMs, almost 300 touch points in the network. Obviously, we'll spend some time. I'll talk about the operating environment, talk about Union Bank, we'll talk about our financial performance, and then look ahead. So for 2020, if you look at the economy, right? If you look at the economy in 2020, talking about the macro, the key element that we saw from a macro perspective is that in 2020, due to the impact of COVID-19 and the fall in oil prices, the economy slipped into a recession in 2020. Consequently, we saw a decline in reserves, not too sharp, but reserves did decline, driven primarily by ongoing FX interventions by the CBN as well. Towards the end of 2020, we saw a gradual recovery of crude oil prices and closed the year at just about $50 per barrel. And in the last few weeks, we've seen it trending at 70, close to $70. Inflation is at a 3-year high of almost 16% at the end of 2020, and most recently turned up to 17.3%. And that's largely due to rising food prices, electricity tariffs rising, and FX, the challenges on the FX front. On the regulatory front, we saw that CBN adjusted policy rates in order to drive credit expansion and economic output, bringing the MPR down from 13.5% to 11.5%. In September, CRR also, going up, right? All in a bid to drive credit expansion, kept the equity ratio also flat. CBN also came out with a policy on diaspora remittances to support remittance inflows, a new check policy to enhance security, to the extent that anybody was still using checks, and then also a framework for regulatory sandbox operations to promote innovation. On the political front, we saw that the 2021 budget is 26% higher than the 2020 budget. Land borders were reopened in December 2020 to boost into regional trade. And then the government also set aside 10 billion for procurement and evaluation of COVID-19 vaccines. On the consumer front, we continue to see inflationary pressure especially on the food inflation side. Transport prices were up, electricity and petrol prices up, employment continuing to rise. And you saw consumers focusing really on essential products and services. So what you saw was then food, personal care, airtime, boosting FMCG and the telco industry. The next slide, which talks about the macro overview, is what I've talked about: movements, GDP, recession, inflation going up, external reserves dipping, crude oil dipping, but coming back up, and exchange rates just inching upwards, closing at 410 roughly. So let's talk about Union Bank and where we are. Our vision remains unchanged: to be Nigeria's most reliable and trusted partner. It's not just a banking partner, but a partner in all ramifications, and we continue to stay focused on making lives better by delivering the simplest, smartest solutions and guaranteeing the best experience every time. So let's recap what our 2020 priorities were. In 2020, we said we would focus on the regional and value chain, one bank approach. We said we would focus on emerging segments, our alpha proposition, tech ventures, and SMEs, offering compelling products and services. We said we would focus on education, leveraging our Edu360 platform, transaction banking, leveraging payments and collections. In addition, our channels and our digital platforms for sales and service productivity, operational efficiency, and new revenue streams. Those are the things that we said last year that would be our priorities, those 6. And how did we do across those 6 priorities? Essentially, on the regional value chain, we saw the share of our key anchors go up almost double, basically from 5.5% in 2019 to 9.5% in 2020. So what we had identified, the key anchors, we grew our market share there. Distributors who are part of that value chain, 3 times growth in sign-ons and 2.5 times growth in anchor sign-ons. On emerging segments, Alpha, we had almost 8,000 users on the Alpha Hub, 5 billion in new loans. We had an increase in SME loans, slight increase because that was an area that was significantly affected in the pandemic last year. So even though we grew, it was probably about 10% on that front. But we did bring in 10,000 new-to-bank customers. We grew the loan book in education 1.2 times. We onboarded 100 new schools, more than 100 new schools, and we had a number of Edu360 webinars impacting over 11,000 people, and we trained 324 teachers. Essentially, we did not have a physical Edu360 event as we had done in previous years, but we did leverage technology to reach a much wider group of people. On the transaction front, that continues to grow. We had 1.5 times year-on-year growth in payment value, and in particular, Union One and Union 360, which is the corporate side, had a 10% increase in users. Our channels, we had on Union Direct, which is our agent network, we had 13 times revenue growth, 1.5 times revenue growth on Union Mobile, and we provided additional service on our digital platforms, account opening, card delivery, PIN retrieval. And for 2020, we had 94% of bank-wide transactions through digital channels versus 80% at the end of 2019. And we have a number of digital ventures propositions which are set to launch. What else did we do in 2020? We continued to fund the bank's balance sheet incrementally to support growth in priority areas, both local and foreign currency. We raised commercial paper. The notes were oversubscribed. We raised 35 billion in 2020 in local currency, additional incremental funding. On the foreign currency side, former OPEX, which is now DFC, AFEXIM and IFC funding, we raised in excess of 300 million, 200 million 10-year from DFC, 75 million AFEXIM and 30 IFC. Those are to continue to fund our priority areas. Throughout 2020, which was really the year of the pandemic, we continue to support our various stakeholders, be they customers, employees, and the community within which we operate. So on the customer front, we what we did to support improved our digital channels, increased self-service options. We introduced Saturday banking, and then increased the ATM withdrawal limits up to 300,000 naira. We launched a toll-free number for customers to perform their transactions. So previously it was a paid number, but we said during that pandemic period, dial in, call in, you don't get charged to do whatever it is that you would otherwise be doing through the toll-free number. We offered a number of restructuring on loan terms during that pandemic period. On the employee front, we had about 40% of the total workforce working remotely. At the peak, we had over 75% of the workforce working remotely when almost the entire country was in a shutdown mode but were providing services. But now it's around 40% and making sure that our staff are very well equipped with adequate PPE, limiting travel to only essential trips and providing workplace safety courses, basically to educate our employees on health and safety measures. And we continue to upskill employees through our digital academy. On the community side, we had the Human Rights Challenge, which rewarded 40 UBN customers with 10 million. We had virtual engagement with over 10,000 customers through webinars. We made donations in excess of 350 million to fight the pandemic. That's 350 million naira to fight the pandemic and boost food supply. And then we partnered with the Give Food initiative to reach a million underprivileged people. For 2020, staying on the highlights, we focused on strengthening our business continuity and resilience. And the risk areas that we focused on, liquidity, assets, and profitability, the areas that is were at risk during the pandemic. We did focus on I talked about raising longer-term liabilities in local foreign currency terms, engaging with our partners, our foreign currency funding partners to maintain existing credit lines, and working with our customers to effectively hedge their key exposures. On the asset side, we make sure that we continue to look at the portfolio very closely, ensure that obligors in vulnerable sectors, we were able to work towards possible restructuring with CBN forbearance. And we heightened our early problem recognition for vulnerable areas, including oil and gas and trade, as well as leveraging the CBN intervention funds that were available to drive lending in key sectors. In order to make sure that we continue to focus on support our profitability, we grew lending to essential sectors, which are healthcare, local manufacturing, FMCG. And we intensified our digital efforts and incentivized usage of various channels for efficiency and continued our cost optimization efforts. In fact, not just continued, we intensified those. And what did we see? We saw strong synergies across all our customer segments, corporate, commercial, retail, SME. We saw growth both on volume and transaction values across all those segments. Loan volumes grew in the corporate side, commercial segment, the loan volumes and deposits grew. Retail grew deposit volumes significantly. Loans also grew from a relatively small base, but that continued to grow. And the SME segment continued to grow because we look at the entire if you look at the entire customer segment matching against the various customer ecosystems and value chains. On the channel front, we continue to see growth across all channels, except for POS, which stayed flat, but all Union Mobile, Union 360, Union Direct, those grew. So Union Mobile, the number of users grew 1.3 times, volumes doubled, values virtually doubled. 360 volumes 2.3 times, values 1.5 times. And Union Direct, which is our agent network, the agents went up 7 times, volume went up 10 times, value went up 12 times. The ATMs and POSs flat to slight decline because more of the transactions either moved to digital channels or, in some cases, the ATMs, the physical ATMs and some of POSs not accessible during the lockdown period in 2020. What we're also seeing is our new and retail digital offerings showing positive results. We launched Union Infinity and Union Legend for children and teens. And we more recently launched M36, which is wealth management, loans, investments, our digital concierge. You can do quite a number of things on that front. So we did provide launch and offerings for very broad of our customer base, as well as something M36 for customers who wanted to more personally manage their wealth and their finances. From a community perspective, we continue to focus on the CSI initiatives impacting people. And we had, our own estimate is over 3 million people were impacted by CSI initiatives in 2020. And there's education, where we sensitized, there was sensitization on child abuse, and 360, where over 11,000 people were impacted through our webinars. We trained young kids on robotics. We supported school children through our Bottles for Books initiative. And then on diversity and inclusion, we partnered with Mama Money, Empowerment Foundation, Pearl Africa Youth Foundation, and Junior Achievement Nigeria to train women in sustainable livelihood and ICT skills, young girls in leadership, entrepreneurship, achievement and development. On the education side, just to remind, we partnered with Awari Sese Yara Foundation, Rural Development and Reformation Foundation. On the environmental side, we increased our green activities to promote and foster a sustainable environment. Number of solar park branches increased from 99 in 2019 to 142. Solar park ATMs increased from 61 in 2019 to 417. So almost half our ATMs are solar powered now, and that continues to increase. And we recycled over 110,000 kilograms of waste since 2017. On the community front, we provided clean water to 6 communities across Nigeria and impacted over 1 million people through our Give Food initiative. So I will hand over now to Joe. But before I do that, just wanted to add that on the back of a strong set of results, the board has recommended a dividend for the second year in a row. You recall that last year was the first time we paid a dividend in 10 years. The board has proposed, subject to the shareholders, subject to shareholder approval, a final dividend of 25 kobo per unit of 50 kobo ordinary shares held will be paid at the next AGM. So I'll hand over to Joe, our Chief Financial Officer, to talk through the financial performance for 2020. Joe, all yours.
So thank you, Emeka. It's a pleasure to be able to communicate our numbers. Gross earnings for 2020 was slightly lower than 2019 by 2%, and truly driven by lower interest income, which is a direct consequence of the lower interest environment in 2020 versus 2019. Impairment was lower in 2020 versus 2019, hence PBT at the end of the day was slightly higher than 2019 by close to 3%. One area we're very proud of is around our customer deposits, where we saw growth that reflected what we believe is a compelling product and offering, a service offering throughout the year, and also reflects increased adoption and affinity for our digital channels through the pandemic period. Our channels actually saw huge transaction growth. So we grew deposits by 28% year on year and crossed the 1 trillion naira mark for the first time. Our gross loans also grew by a significant 24%, year on year, which reflects continuous focus on the growth sectors in the Nigerian economy. Looking at the key ratios, there was a decline in the return on average equity. Really, it's more of the fact that there's higher growth in the denominator, which is the equity line, versus the returns in 2020. Let's see, NPL, we have a slide for cost, so I'll come to cost in a few minutes. Non-performing loan ratio dropped by close to 2% year on year. Really, there was significant growth in our risk asset portfolio, hence a decline in the ratio. I'll skip the next two slides, just provides more details of our financial performance at the bank and at the group levels. So the slide that I'm on is a slide that has to do with the earnings breakdown. We'll see the slight decline in interest income from 116 in 2019 to 113 in 2020. However, thanks to robust growth in net trading income and revaluation gains, we saw growth in non-interest income. And this was at the time when the per transaction charges for digital channel transactions was significantly impacted by regulation. In the next slide, we go into some depth around our operating expenses, where we saw expense grow by 10%, lower than inflation, but more importantly, it's where the growth came from. We saw growth in regulatory charges as well as software expenses. Software expenses growth reflects our investment in refreshing our core infrastructure in support of our digital channels and growth in transaction volumes across the business. It's also important to note the slight decline in staff cost year on year by 2.4%, and as a proportion of total OPEX from 47% to 42%. This is reflecting increasing employee productivity across the board. At the bottom, well, actually, in the middle part of this slide, diesel and power. It's important to call it out. Yes, the cost year on year is flat, but this was at a time when there was increase in electricity tariffs towards the end of the year. I'll say thanks to the switch to alternative solar power. Emeka did mention that over 140 branches are on solar, as well as over 400 ATMs. And we continue to invest in this alternative power source. At the bottom of the slide, just reflecting our donations to support the country's response to COVID-19. This was way beyond our regular donation levels. The next slide looks at our funding mix, where we show overall a significant growth in customer deposits. But I think what is important to call out here is the fact that savings deposit grew by close to 40% from 265 billion in 2019 to 368 billion in 2020. And we believe it's a clear indication of the strength of our retail business model and the products and services we offer our customers. Yes, term deposits grew slightly, but we realized that the cost of term deposits end of 20 was not higher than other deposit types. So for us, it did not lead to any increase in cost of funds. As you see on the right side of this page, where we see a decline in the cost of funds from 5.6% to 4.2%. we actively managed the deposit book to obtain this result. Bottom right shows the fact that the customer deposits continue to be a significant component of our mix, but we increasingly are diversifying our portfolio, as you see on both parts of this slide, of this chart. On the next slide, we show some more analysis around our loans. Gross loans increased by 24%. The composition from a currency perspective did not change year on year. On the right-hand side, I just want to call out the growth in the retail loan portfolio. Yes, it's just 1% increase in terms of contribution to the pool, but from a numbers perspective for the retail business, there's growth from 43 billion in 2019 to 62 billion in 2020, and it continues to grow. Remember, retail loans come in little pockets, so there's a robust infrastructure and process around this. The next slide talks to the diversified loan portfolio we carry. I'll basically call out a few focus areas. The first is around manufacturing in support of fast-moving consumer goods sector, where we see a growth from 14 to 18% year on year. We also see that, it's good to call out the fact that oil and gas on the surface have grown, but about half of this growth is coming from revaluation, basically, of the balances, which are dollar denominated in some cases. So I was on the slide that has to do with the asset quality. I was looking at the NPL ratio, where our ratio improved from 5.8% in 2019 to 4% in 2020. And I talked to the fact that we, as a bank, continue to focus on the quality of our loan book, and the intent is to continue to reduce the NPL ratio going forward, and the stock of NPLs more importantly. The next slide deals with the key ratios, which are all above the regulatory requirements, except for the loan-to-deposit ratio, which has to do with the significant growth in our deposit portfolio, growing over the growth in the loan portfolio. But on the right-hand side, capital adequacy at 17.5%, significantly above the threshold, 15%, and our liquidity remains robust at 40.9% at the end of the year. On this note, I would call on Emeka to take us forward. Thank you.
Thank you, Joe, for that. So looking ahead, for us at Union Bank, we remain a partner that supports and amplifies all things Nigeria-centric. For us, our focus continues to be on Nigeria and looking at Nigeria from a long-term perspective. So we will continue to support not just what happens in Nigeria, what happens by Nigerians, whether for Nigeria or partnering with others for going out. So whether it's local manufacturing, learning and earning, those are areas we'll focus on. And it's across all our customer segments, the retail, SME, corporate and commercial, supported by Treasury. There are 3 areas that we're going to focus on, 3 priority areas in 2021 as we go forward. And the objective is to enhance both the shareholder and stakeholder value in what we define or what we term as the next normal, which we're in. So one is growing our customer acquisition, engagement, and transactions. So basically, we'll continue to build and monetize ecosystem. We'll optimize service delivery, so optimizing the end-to-end customer experience, continue to make it simpler, for customers to engage with us and consequently drive high-value engagement with customers. And we will continue also to explore beyond banking opportunities in partnership with others. So we will explore non-traditional banking opportunities that are adjacent to what we do. Right? We have a commercial banking license. What we are able to do within that, we will do. But other opportunities that may present themselves, we will partner with others to do those, and effectively enhance our revenues and accelerate our effectiveness. As far as 2021 goes, in terms of guidance, given the evolution from COVID environment last year into this year, we will not at this call be giving specific guidance. However, what we expect in 2021 at this point is continued loan growth and deposit growth, improvement in key metrics. So we expect to maintain the NPL ratio sub 5, improve on our ROE, ROA, our margins. We expect those to go up again, and our cost-to-income ratio trending down. That's the general guidance for now. But by the time we have the mid-year conversation, we will be able to share with you how we see 2021 evolving. As you may know, this is my last analyst call as CEO of Union Bank. I want to say a big thank you to everyone who is on the call for your engagement, for your time over the last few years. It has been a pleasure to engage with you, to hear your perspectives about Union Bank, to share our own perspectives with Union Bank. And I'm very sure that my colleague who is going to be taking over from 1st of April, Mr. Emeka Emuwa, will be able to continue to share with you the direction of Union Bank, the perspectives as to what we're doing on a going forward basis. So with that, ladies and gentlemen, open to questions, any questions that you may have. Thank you.
Thank you, sir. Ladies and gentlemen on the conference call, if you wish to ask a question, please press star and then 1 on the keypad on your screen. For those participants on the webcast, if you wish to ask a question, please submit that in the text box at the bottom of the page. Again, if we wish to ask a question on the conference call, please press star and then 1 on the keypad, and you will hear a confirmation tone. The first question is from Ajibola Oladele Awolowo, who is an investor.
All right. Thank you very much. I'm Ajibola. I'm an individual investor. I'm just looking at your numbers. Well, first and foremost, great job so far to the team for what you've done so far. Look forward to even a better 2021. Looking at the numbers, the outstanding shares for the company went up by about 0.2%, specifically by about 51 million units thereabout. And this was attributed to the LTTIP shares allotment. I feel probably is like a long-term incentive plan for staff or for member staff. The same was seen in 2019. To know if this is something that we'll be seeing every year, like the LTIP program, bolstering the outstanding share year on year. That's my first question. Secondly, looking at the share structure of the bank, about 90% of the bank is owned by core investors, Atlas Mara and Union Global Partners. I just want to know what the fate or what are there adequate protection in place for like the minority shareholders, those that hold just about 10% of the bank. And thirdly, I would like to know if the board is privy to the long term of the core shareholders in the bank, these two people who own about 90% of the bank. What is their long-term plan for their holdings? And lastly, in the media, there's been a lot of rumors swirling around about a possible merger of the bank or possible divestment of these core investors. Is there any truth in all of this? Thank you very much.
Okay, I think we can take that quite straightforward. So as far as the LTIP shares, yes, you saw that 19 and 20, but you should not expect to see that. It's not a continuing. It's not something you expect that you will see going forward. I think that has come to an end. You're right. There is concentrated shareholding. However, don't forget that the regulators, regulators, whether the stock exchange, the SEC, make sure that minority rights are protected. And we have very strong governance here at the board level, and the shareholders are very aware of this. So minority rights continue to be protected, and that is certain to continue. When I talk about the rumors, and that's exactly the word, rumors, those were dispelled. So there's nothing to those rumors, and those were officially dispelled. Thanks.
Does that answer your question, Sajibola?
Oh, yes, it does. Thank you very much for the candid and straightforward explanations. Thank you.
Thank you very much. So we have no further questions on the conference call at the moment. Do you have any questions from the webcast?
Thank you. Thank you. We have some questions on the webcast for the management. First question is, thank you for the presentation. What are the top 3 risks to your expectations for core operating performance in 2021? Second question is, in view of your improved outlook for future performance, are you looking to instill consistent dividend payments going forward? Will you be inclined to guiding to potential payout ratio in coming years? And the third question is, there's a recent trend of banks tilting towards a holdco structure to de-risk future operating performance. Is such a tilt a consideration in the medium term? The questions were from Philip Anegbe. So if you can please.
Thanks. As far as risks to performance go, I think any risks to performance are in the macro, right? So we had a recession last year. We've come out of that from all indications. If the economy continues to evolve positively, then that will mitigate the risk. Because the risk you would see the risk around the portfolio. We're a bank, so that's where you see risk. So as long as the economy is evolving right, and that's something that we're focused on managing, regardless of which way the economy evolves. If you look at last year, what again did we have to deal with? We had to deal with a degree of margin compression. So depending on how the world evolves, that's also risk, but that is something that we've dealt with and continue to deal with by accelerating the volumes that we achieved to offset that. As far as dividends go, we started paying last year, we're paying this year. As in all things, we expect to be consistent. What I cannot do is tell you what the amount of dividend that it will be, but do expect a degree of consistency. As far as the holdco goes, no, there's no immediate plan to go the holdco route. The other risk I didn't mention was, again, macro-related, relating to FX. But again, we've been through those. We've had 2020 was challenging on the FX front, but we've come through it. And so depending on how the environment evolves, it is a risk, but we expect to manage through that risk. So that answers those questions. Thanks.
Thank you, Iggy. The next question is from Wale Okunriboye. He says, I'd like to say you have done a good job in turning Union Bank around from the dark times. I wish you all the best in the future. My questions are as follows. What is the balance sheet positioning of Union from an FCY perspective? Are you long on dollars? Can you provide an estimate of the size? And the second question is, what is the guidance of net interest margins over 2021?
Thank you. As far as the net interest margin goes, I think I mentioned that in my closing, which was basically we expect an improvement. And we're not giving any specific guidance at this time. As far as the balance sheet goes, I'm not able to give you what the specific number is, but suffice to say that it's generally long, right? Okay, thanks.
All right. We have a question from Abdurrauf Bello. He says, I note the significant rise in the group's total deposit base. There was a marked decline in the group's CASA, although cost of funds lowered in full year 2020. How sustainable is it going to be in 2021 and beyond, given the material rise in term loans and other borrowings, particularly the ones in USD?
How sustainable is what?
Okay. I'll repeat
the question, please.
I note the significant rise in the group's total deposit base. However, there is a marked decline in the group's CASA. However, although cost of funds lowered in full year 2020, how sustainable is it going to be in 2021 and beyond, given the material rise in term loans and other borrowings, particularly the ones in USD?
Okay, so in terms of CASA,
the proportion that dropped.
Yeah, maybe the proportion dropped somewhat, but the absolute amount went up, both current accounts and savings accounts. Savings especially went up, and we believe that this will be sustained over time. What was the second leg of the question?
Cost of funds.
Okay.
A question from Olushola Balogun, Absa Bank. Any plan by the bank to reposition and be among the top tier 1 in the country? Secondly, any growth expansion beyond Nigeria and Africa?
No growth expansion beyond Nigeria. As I mentioned during my presentation, we're focused on Nigeria and will continue to grow in a sustained way for the foreseeable future.
Another question from Wale Okunriboye. He says, in your estimate, when do you think the cost-to-income ratio will come down to sub-70 levels? And what key levers do you need to pull to get there? Second question is, Union 2021 bond will mature later this year. Will you be looking to tap the local market for another issue?
Okay, as far as the bond, I think it's early days to speak about the bond. We will assess closer to the time whether there's a need to, right? Because our funding we'll use our funding to support the activities that we do. So if it's necessary to do so, we will do so. If it's not, we won't. And the other question was around.
Yeah.
So I mentioned earlier on that we expect our cost-to-income ratio to continue to improve. So over time, we will achieve the numbers that you are speaking to. Thank you. I think that's.
Do we have any more questions, live questions?
We currently have no questions in the conference call, sir.
Okay. We have a question from Andy Zaku of Capital Care. I wish to commend the management for improved performance in 2020 in spite of unique difficulties that characterize the year. How do you intend to ensure a healthy loan book going forward in order to avoid the pitfalls of the past, now that you are expanding to grow the book size again?
Thanks. Well, as you mentioned, pitfalls of the past. We've been through two crises. When I say two crises, two periods when the macro environment was strained. And you will see that we have, one thing is clear, we have learned from those. The 2016 crisis, we've learned from it. And therefore, going through 2020, our portfolio was in much better shape than it was back then. So the simple answer is that we continue to be prudent. We continue to look at our portfolio carefully. We continue to look at early warning signs. And we continue to make sure that the areas that we lend to are resilient sectors of the economy. That's how we have navigated the recent past, and that's how we expect to continue to navigate into the future. Thank you. Yeah. Okay.
All right. Over to you, Chris.
Thank you.
Thank you very much. Ladies and gentlemen, maybe a final reminder, if you wish to ask a question on the conference call, please press star and then 1. So we don't have any questions in the queue. Do you have any closing comments?
Well, again, thank you for joining us today. Thank you for engaging with us. As I said, over the last few years, this is my last analyst call, and I wish everyone all the best. Again, final thanks, and I look forward to your continued engagement with UBN and with the incoming CEO, Mr. Emeka Emuwa. Thank you very much, and have a great day.
Thank you very much, sir. Ladies and gentlemen, that then concludes this event, and you may now disconnect.